What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is April 6th of 2022. Before we jump into this video, please go ahead, click the like button and subscribe to my channel. If you are here watching because of Long Island Audit's shout out yesterday, I appreciate you for joining us. Long Island Audit is my cousin, and yeah, really appreciate his shout out. Basically what I do here is every day I recap the markets. I run a trading community. It's called Pristine Capital, and this is really just a summary of what we saw during the day, some of the things that I traded, etc. If you are interested in getting all of this information, live in real time as I'm sharing it with my members, feel free to go to pristinecapital.net and you can go ahead and sign up there. If you are not an active trader, which is what I am, and really what most of the people in our group are, I am creating a product, and it is going to be more so for the part-time passive investor to help them with their investing, so stay tuned for that. With that being said, let's dive into today's market recap video. Before we do that, quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not go YOLOing your account to any one of my trades or anyone's trades for that matter. You never want to go all in. You never want to do something stupid like that and just gamble away all of your money. All right, let's dive in here. Let's take a look at these box scores for the markets. Today we had the S&P 500 finish down 1%. The NASDAQ QQQ finished down 2.17%. IWM small caps down 1.42%. Dow Jones, I call these the dogs of the Dow, they were only down 0.46%. They lagged to the downside. And then we have this ARK Innovation ETF down 4.63%. Poor Cathie Wood just getting clobbered today. Pretty much all of these indices, they closed towards the middle of their day's trading range, and you can see we had a volatility expansion across the board, but the VIX did not close on the high. So we'll take a look at the VIX as well, and then you can see the breadth of the market, which is the number of stocks that are advancing versus number of stocks that are declining, was very weak. Think about this: if you're buying a stock and the percent of advancers is only 43%, that means if you buy a stock today, there's a 57% chance that your stock is down. So it's really just the odds of picking a winner are lower when you're in these weak markets. My trend model, which is what I use to guide my exposure, is still at a -1. My trend model oscillates from a -3 to a +3. I created this as a prop trader a few years back, and I've been using it ever since. This thing, it really works like a charm. A lot of times as traders, we get feelings about the market where it's like, oh my gosh, the market is doing XYZ. I see these headlines. I feel like the market's going to go down, or I feel like it's going to go up. Using my trend model keeps me on the right side of the market, and it takes a lot of the emotions out of my trading. So let's take a look at the big news for today. We had the Fed minutes out today. This is basically, the monthly Fed meeting where they talk about monetary policy. We basically have this group of market wizards that it makes no sense. It's completely centralized. But these guys, they basically have a monopoly over interest rates and the money supply. And they get together every month, and they're like the masters of the universe. And they're deciding what's going to happen with interest rates, with the money supply, etc. And basically the fate of all investors is in their hands. It's a very odd system. But anyway, we got the minutes from their last meeting. And they said, you can see here, these Fed officials, they weigh pruning their balance sheet by $95 billion a month. That is tightening of monetary policy. Every weekend I do a weekend market analysis video, and I share it with all Pristine Capital members. One thing that we talk about extensively every single week is that the bull market we've had in equities, in the S&P 500 and everyone's 401ks, etc., it has been on the back of the Fed just continuing to expand their balance sheet like this. So they've been expanding their balance sheet, and the market has been doing the same thing, just going up and to the right. Now the Fed, their balance sheet is going like this, sideways. And pretty soon the balance sheet is going to start going down. So it makes sense that the market is seeing some crazy volatility. There's a lot of people that they're like, well, I'm ready to buy the dip, whatever. But it really makes sense when my trend model is negative, when we're seeing these bad things on the monetary policy front. It makes sense to really just take a more measured approach. You don't want to go crazy taking on risk. So that's why for right now I'm in about 86% cash. I'm very light on positions, and I'm in no rush to jump the gun and go crazy, shooting the lights out. Take a look here at our Finviz Heat Map. You can see Microsoft was down over 3% today. We had Apple down big, Amazon, Tesla. A lot of these big stocks that were leading the market higher are trading down significantly. Areas of strength, we had healthcare pretty strong, consumer defensives, and those are really the areas of the market that fund managers go into when they have to be invested in equities, but they want to be in something a little bit more defensive. So overall, a very risk-off tone today. Sectors, take a look at this. So we had basically a bloodbath across the board. Again, there were just a few bright spots. The utility stocks were up 2%. That is certainly not a risk-on environment when that group of stocks is leading. And then our style factors, look at this. Growth stocks were down over 2%. High beta stocks were down well over 2% as well. And some of these more defensive areas of the market were bid. Seasonality, and this is coming at a period where the market historically is pretty strong. April is usually a good month. So the fact that April is starting off on really rocky footing, that is just not good. It's not very confidence inspiring. All right, let's take a look here. Let's actually dive into the indices and just assess the carnage today, team. All right, so let's pull up these charts. S&P 500, check it out. We got super extended. This pink line is the 20-day simple moving average. This is a great technical indicator, even when the market is going oh so bullish. There's always periodic pullbacks to the 20-day simple moving average. That's exactly what we got today. You can see we have our monthly value area high, and we have not yet retested this 44.28.25 level. We did end up making a lower low. You can see this red line. I made the red line at the low of the day from this last pullback, April 1st. So the fact that we're making lower lows, and you can see right here, this was our first lower high, that means, hey, the market might be entering into more of a downtrending price pattern. So that is definitely something we want to be cognizant of. And again, with my trend model being negative, I want to make sure I'm not going too crazy with risk. And take a look here. We did have some bounces throughout the session, I must say, but we ended up bouncing right off this 20-hour moving average, and we're still in the doldrums. For me, really what I'm looking for moving forward, given that my trend model is negative, is, hey, if we get back above 4,500, that's pretty good. That's risk on. And, hey, maybe it's appropriate to look at some long positions, etc. Until we get there, nothing is really looking that enticing. Let's take a look at the NASDAQ. NASDAQ also down pretty big today. The NASDAQ actually did retest this monthly value area high. So, yeah, we're on the cusp. We're sitting on top of a support level. And the real question is, what happens tomorrow? Are we going to respect the support level and bounce off of it or not? The fact that we tested this level and we didn't have just like a ton of dip buyers come in and we just auctioned right off of it, that tells me, hey, there's not so much demand for the market at these levels. So again, I want to make sure, for me, the market's really my dance partner. I want to make sure that I am not stepping on my dance partner's toes and I'm respecting what the market is telling me. Russell 2000, we just also lost all these key moving averages. We have our monthly value area low down here at 1980. Do I want to step out in front of this freight train? Absolutely not. And then we have our dogs of the Dow. They also pulled back to this monthly value area high. In terms of trades, I did not do any trades today. There was actually one trade that I was looking at, and I stayed on the desk. Usually I go to the gym at around like 11 a.m. because I like getting off the desk. I don't like staring at the price action for too long. And so today I was like, I got this set up, shared it with everyone in the community. Hey, if we get to the 20-day simple moving average, I'm interested in taking a day trade in the S&P 500. I ended up waiting. We did not get the retest. I finally decided, hey, I'm going to go to the gym. It's maybe like 1:45. And sure enough, I knew it. The moment I stepped on the treadmill, we did get that retest. That being said, it's all good. When the market is in its downtrending sequence, there's always going to be those opportunities for day trades. That one would have worked very well. But hey, it's no big deal. It is what it is. There's a lot of people that are getting their faces ripped off because they are up to their eyeballs with risk. So I'm just glad that that is not my situation. Now, for a potential trading opportunity tomorrow, if we do end up tagging this monthly value area high in the S&P 500, this could be another spot where the market could potentially bounce. So I will be looking at that tomorrow in terms of a day trade to the long side. But other than that, there's not really all that much. I mean, let's take a look at some of these stocks. Apple, this one pulled right into support, but we have this 20-day simple moving average still looming below us. And the idea is, like, for me, I never try to like catch the bottom. That's like a newbie trader thing to do. Like, let me try to sell the top, let me try to buy the bottom. It's better to see, okay, maybe we retest this 20-day moving average, and as we start to bounce off of it, that's where I want to get involved. I don't want to be the first one. I want to see some institution sticking their neck out before I do. Tesla was down 4.17%. We still have support below us. So again, this is also sort of in no man's land. Let's take a look at Google. Google, this one pulled into supports. This one is more mature in this down sequence. But yeah, for me right now, I am in no rush to go ahead and do anything crazy. With that being said, that about does it for this market recap video. Again, if you have not already, please go ahead, like and subscribe to the channel. Hope you all have an awesome evening, and I will see you all tomorrow in our pre-market webinar.